Hey everyone, Rivian updated investors with their progress in the latest quarter, and I'll go through some of the big picture items I was looking for from Rivian, including its progress in improving its profit margin, how it's using its cash and how much cash it burned in the quarter, progress on the lower priced model, and several other key important metrics that investors need to know about from Rivian. I'll also update my recommendation for Rivian stock. Coming into this quarterly update, I did not have Rivian stock rated as a buy, and so I'll update you on my rating for Rivian stock after reviewing these results. So let's take a look at the figures.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Rivian noting that in the quarter they unveiled their new mid-sized platform with the R2, R3, and R3X. The lower priced platform is the key for Rivian to gain broader adoption. Right now it's selling roughly 50 to 60,000 units for the year, and its vehicles are expensive. Its SUVs can run you upwards of $100,000 for an electric vehicle. And combined with the added inconvenience of having an electric vehicle, that's a lot to pay. And so that's a very small market of individuals that would be interested in that kind of product. If you offer a lower priced product in the $40,000 to $50,000 range, like Tesla's Model Y and the lower priced SUV, you get broader adoption. You can open up a broader market opportunity for yourself. That's good news. I like that Rivian is introducing those lower priced models. They also introduced or announced that the R2 production will happen in their existing manufacturing facility. That was another good decision in my opinion, which they expect will drive greater capital efficiency with over $2 billion in savings from the plan, and it'll enable the production to start sooner in the first half of 2026. Now, if you weren't already aware, Rivian was planning a new manufacturing facility in Georgia, and they were going to produce these R2 units in that new manufacturing facility. But given the state of the electric vehicle industry, given that demand is so low, and given that they already have enough capacity to produce in their existing facility, it made no sense. It made little sense for Rivian to expand, adding more manufacturing capacity. I mentioned they're only expecting to sell roughly 50 to 60,000 units this year, 57,000 to be precise. And they have enough capacity for 215,000 units of production. So if you have enough capacity for 215,000 and you're only selling 57,000, why add more capacity? Why? Right? We're long past the days when there was strong enthusiasm for electric vehicles, right? Reality should be setting in, right? You should already realize that consumer demand for these vehicles are not as strong as you thought. They're less than half of what you thought they were going to be. So you need to adjust your plans downward. Every EV company needs to adjust their plans downward. And thankfully, we are seeing that. We are seeing EV companies and legacy automakers that have EV expansion plans, they're all pulling back. They're all moderating their production targets because they're realizing that people do not want these as much as they thought that they were going to want them 2, 3, 4 years ago. So that's good news. Many more decisions like this could bring this industry back into equilibrium. Right now, the industry is out of whack. There's way too much supply, way too much competition for the existing consumer demand. So that was a great decision, and I thought that was very prudent from management. So Rivian produced 13,980 vehicles and delivered 13,588, and they're on pace for their annual target of 57,000. So they're focusing on driving continued demand and enhancing the customer experience, delivering greater cost downs and plant efficiencies, progressing R2 development, and driving towards profitability. All good steps. I think you've got to work on lowering your cost to produce, which Rivian is doing. You've got to find ways to entice consumers to buy these vehicles, right? This isn't a necessity. This isn't something people need. This is a luxury item, especially with Rivian. It's a super premium luxury item. So you've got to convince people to buy this item, and you've got to find good ways to do that. You've got to be effective at getting people to pay $100,000 for transportation when they could get transportation for $20,000, right? So it takes a lot of selling, it takes skill in advertising and marketing to get people to purchase these units. So one of the ways Rivian is trying to get more people to buy is that they're launching a leasing program, and that grew with the number of states it's offering. It's also offering a standard range variant, which makes the R1 a little more affordable. And they acknowledge that the vehicle market is still experiencing challenges. Yeah, I think everyone knows that the EV market is experiencing challenges. I think we're beyond calling it challenges. I think we need to acknowledge that those projections that were made in 2020 and 2021, we need to acknowledge that those projections were way too high. They were way too optimistic, and that demand for these vehicles are just going to grow a lot more slowly than we initially thought. It's probably still going to grow as the technology improves, as these companies figure out how to produce these vehicles at lower cost, as the infrastructure expands. It'll grow, but just very, very slowly. It's not going to grow at the lightning pace that people thought it was going to grow. And so they're on track of lowering their conversion cost per vehicle during the second half of 2024. I was happy to see that for Rivian. Remember, they highlighted that they're going to be profitable on a gross profit basis in Q4. They're on track to do that. So they're going to develop that R2, and that's going to be a significantly lower price point than their R1. That's great. It's going to be significantly lower priced. So they're highlighting that in the first quarter, the gross profit per vehicle was negative 38,784. That's how much they're losing on each vehicle they're selling. Not a sustainable business model. They need to improve the unit economics, which they are working to improve. Now they expect significant improvement in material depreciation and cost of their vehicles, and they remain confident that they're going to be gross profit positive by Q4 this year. Excellent that they're on pace for that. Okay, so on to the financials, which unfortunately look very, very ugly for Rivian. The company generated significant losses on the bottom line, which I will share with you here. I want to draw your attention to March 31, 2024. That's the latest quarter. The company generated 1.2 billion in revenue, and the loss from operations was 1.484 billion. 1.484 billion in losses on 1.2 billion in revenue. To make matters worse, that was an increase from last year. In the same quarter, they lost 1.433 billion in loss from operations. So they're going backwards. Even though they increased their revenue almost doubled year over year, their loss from operations increased. So growth in revenue is not leading to improvement in the loss from operations. And even though they're making improvements on the gross profit, they're going backwards in selling general and administrative expenses. You can see that increasing for 1, 2, 3, 4 straight quarters to 496 million, up from 402 million. Remember, I talked about how companies sometimes will tell you that, hey, we're going to be gross profit margin positive, but you can see gross profit is up here, it's above the line, and then selling general and administrative here. And this is where advertising, marketing, and promotions costs go into. So if a company wants to be gross profit margin positive, they can just increase the spending on marketing and advertising, which will help them sell more vehicles at higher prices. They'll be gross profit margin positive, or they'll get better gross profit margins, but overall operating income will worsen because they're spending more just in a different area. So it's a way a company can hit a goal of being gross profit margin positive while not improving the business overall. They're just shifting the spending and really trying to pull one over on investors by telling them they're making progress. But really what they're doing is just shifting from cost of goods sold down to marketing, advertising, and promotion, which looks like the direction that Rivian is heading in. All right, the cash burn in this company is really, really bad. The company generated 1.269 billion in cash outflow from operations. That's how much cash they burned in their operations. That was an improvement from 1.5 billion in losses in cash from operations in the latest quarter. So the company now has $5.979 billion in cash and equivalents at the end of this period. That was almost half of what they had at the same time last year, 11.78 billion. So they've went through roughly $6 billion in the last year. $6 billion they've went through in the last year. And in the last quarter specifically, they went through $1.9 billion they lost in the last quarter overall, between in cash used in operations and capital expenditures and others. So they're really up against it in terms of timeline here. They're losing a lot of money and time is running out for Rivian. They've really got to make progress, and they've got to make progress more quickly. They're trading at a forward price to sales of 1.296. I don't think that's a good value. As I mentioned, I did not have the stock rated as a buy, and I'm keeping the stock rated as not a buy, and I'm updating that today, May 8th. I'm telling investors, do not buy Rivian stock. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.